Hey everyone. Welcome back to the channel. I've got some breaking news that just dropped about an hour ago, and it's something that could affect millions of pensioners and older adults across the country. New banking regulations for 2025 are rolling out right now, and they're putting unprecedented restrictions on cash withdrawals for people over 65. We're talking about daily limits, verification requirements, and in some cases, complete blocks on large cash transactions. Now, I know what you're thinking, another banking rule change, so what? But here's the thing, this isn't just about policy. This is about your grandmother not being able to withdraw her own money to pay her gardener. This is about your retired neighbor suddenly needing 3 forms of ID just to get cash for groceries. The banks are calling it elder financial protection. Critics are calling it age discrimination. But what does it really mean for the millions of pensioners who rely on cash for their daily lives? Before we dive into the specifics, I want to hear from you. Do you think banks should have the right to limit how much cash older adults can withdraw from their own accounts? And if you're watching this and you're over 65, have you already experienced any of these new restrictions? Drop your thoughts in the comments below, I read every single one. And if this is your first time here, make sure to hit that subscribe button because we're always breaking down the financial news that actually impacts your life. Alright, let's break down exactly what these new rules mean. Starting this month, major banks including Chase, Bank of America, and Wells Fargo are implementing what they call enhanced senior protection protocols. Sounds official, right? But here's what it actually means in plain English. First, there are new daily cash withdrawal limits. If you're over 65, you can now only withdraw a maximum of $500 per day from ATMs, down from the previous $1,000 limit that applied to everyone. For teller withdrawals, the limit is $2,000 per day, but here's the catch: anything over $500 requires additional verification. Let me give you a real example. Margaret, a 72-year-old retiree from Ohio, tried to withdraw $800 last Tuesday to pay her home repair contractor who only accepts cash. She was told she needed to provide proof of what the money was for, show 2 forms of ID, and wait 24 hours for fraud verification. The contractor couldn't wait, and Margaret lost the booking. Second, there are new purpose verification requirements. This means if you want to withdraw more than $300 in cash, you might be asked to explain what you're using it for. The bank can then decide if your reason is legitimate enough to approve the withdrawal. I'm not making this up. The official policy document states that withdrawals for cash payments to individuals, gambling, or large retail purchases may be flagged for additional review. Third, and this is the big one, there's something called cognitive assessment protocols. If a bank teller suspects that an older customer might be experiencing cognitive decline or could be a victim of fraud, they can temporarily freeze the account and require a family member or appointed representative to verify the transaction. Now, the banks argue this is all about protection. Elder financial abuse costs Americans over $36 billion annually, and people over 65 are targeted in 63% of financial scams. They say these measures will prevent older adults from falling victim to phone scams, romance fraud, and other schemes. But here's where it gets complicated. Who decides what's a legitimate use of your own money? And what happens when these protective measures become barriers to independence? Take Robert, a 68-year-old veteran from Texas. He's been buying and selling classic car parts for decades, mostly in cash transactions. Under the new rules, his $1,500 withdrawal to buy a rare carburetor was flagged as unusual activity. He had to bring his son to the bank to vouch for him before they'd release his own money. I want to pause here and ask you something. Put yourself in Robert's shoes for a moment. How would you feel if your bank suddenly required your adult child to approve your financial decisions? Is this protection or is this overreach? Let me know what you think in the comments. Your perspective on this really matters. Now, let's zoom out and look at the bigger picture, because this isn't happening in a vacuum. These new banking restrictions are part of a broader trend we're seeing across the financial industry. Digital payments are up 47% since 2020, while cash usage has dropped to just 18% of all transactions. For younger people, that's fine, they are comfortable with apps, cards, and digital wallets. But here's the reality check: 29% of Americans over 65 still prefer cash for their regular transactions. We're talking about 16.5 million people who now face new barriers to accessing their own money. The generational divide is real. A recent survey found that 73% of adults under 40 support these new banking protections for seniors. But among people over 60, only 34% approve. That's a massive disconnect. And here's what's really concerning: this could be just the beginning. Industry insiders are suggesting that by 2026, we might see similar restrictions extended to people over 60, then possibly over 55. The justification? Protecting vulnerable populations from financial crimes. But let's talk numbers. According to the Federal Trade Commission, financial fraud against older adults has indeed increased. In 2024, the median loss for victims over 70 was $7,800. Romance scams alone cost seniors $1.3 billion last year. However, here's what the banks aren't telling you: 78% of elder financial abuse actually comes from family members, caregivers, or people the victim knows personally. These new banking restrictions primarily target stranger scams, which represent less than 30% of elder financial abuse cases. So while the intention might be good, the execution is targeting the wrong problem. It's like putting a band-aid on a broken arm. What's more, financial independence is crucial for healthy aging. Studies show that older adults who maintain control over their finances have better mental health outcomes and higher quality of life scores. When we start infantilizing entire age groups, we risk creating the very dependency we claim to be protecting against. Okay, so what can you actually do about this? Whether you're directly affected or you have older family members who might be, here are 3 concrete steps you can take right now. Step 1. Know your rights. These new restrictions aren't federal law, they're individual bank policies. This means you have options. If your current bank is implementing restrictions you find unreasonable, you can switch to a credit union or community bank. Many smaller institutions are not adopting these policies because they value customer relationships over corporate liability concerns. Research your local credit unions this week. Call them directly and ask about their cash withdrawal policies for seniors. You might be surprised at how different their approach is. Step 2. Document everything. If you or a family member experiences these new restrictions, keep detailed records. Note the date, time, bank location, staff member names, and exactly what was said. Take photos of any paperwork they give you. Why? Because there are already legal challenges brewing. The American Association of Retired Persons and several civil rights organizations are collecting cases of age discrimination in banking. Your documentation could be crucial evidence. Step 3. Set up alternative access to your money. This isn't about evading legitimate fraud protection, it's about maintaining your financial independence. Consider opening accounts at multiple institutions, including online banks that may have different policies. Look into prepaid cards for large purchases if you prefer cash transactions. Also, talk to your family now, while you have full cognitive capacity, about your financial preferences. Put your wishes in writing. This can prevent future situations where bank employees override your decisions based on assumptions about your mental state. Here's what I keep coming back to: when did protecting people become synonymous with controlling them? I get it, elder financial abuse is a serious problem that needs serious solutions. Nobody wants to see their grandmother lose her life savings to a phone scammer. But are we solving the right problem in the right way? Maybe the real question isn't whether banks should protect older adults from financial crimes. Maybe it's whether blanket age-based restrictions are the answer, or whether we need more targeted approaches that preserve dignity and independence while still providing genuine protection. What do you think? Are these new banking rules a necessary evil in our digital age, or are they crossing a line into age discrimination? Have you or someone you know already been affected by these changes? I really want to hear your stories and your opinions in the comments below. This affects all of us either now or eventually, so your voice matters in this conversation. And if you found this breakdown helpful, make sure you're subscribed because banking regulations are changing fast, and I'll keep you updated on everything that impacts your financial life. hit that notification bell too, so you don't miss the next video. Until next time, keep asking questions, keep demanding transparency, and remember it's your money, and you deserve to know exactly what's happening with it. Thanks for watching, and I'll see you in the next one.